Hey guys, welcome to Trading the Charts. My name is Rex and this is Tesla Weekly Analysis number 41 for week ending July 17, 2021. On Monday, Tesla was up 4.4%, closing at 685.70. It made a push up towards the key resistance level at 700. This 700 level is at the top of the consolidation zone that it has been trading within since February. And if we look at the monthly chart, it is also where the bottom of the red uptrend channel falls at. Bulls will need to keep an eye on this 700 level this week to see if Tesla can break out above it. Because remember, the longer the consolidation, the bigger the breakout. On Tuesday, Tesla was down 2.5%, closing at 668.54. It pretty much erased Monday's gains as it continues to trade within that 550 to 700 consolidation range. It made a poor attempt to retest the 700 level in the morning as it ran as high as 693 at its intraday highs. It is interesting to note that we have 3 points converging at around the 630 level, which indicates a potentially strong support level there. First is the 50-day moving average, which currently lies at 629. Second is the 200-day moving average, which currently lies at 633. And third is the yellow uptrend line. On Wednesday, Tesla was down 2.3%, closing at 653.38. Tesla continues to sell off and could potentially be pulling back further to retest the 200-day moving average, which currently lies at around 634. This 634 level will need to hold in order for it to maintain its uptrend that it has been trading in since May 19, as shown by the yellow trend line. You should also take note of the indicators which have turned bearish. The MACD has crossed below the signal line. Also, the RSI has broken below its uptrend line, which goes back to May 13. Another thing bulls should take note of is that Tesla has been trading below the green uptrend channel since May 10. Bulls would like to see it break back into this channel as soon as possible. The longer it stays below the channel, the more likely it is to break lower. On Thursday, Tesla was down 0.4%, closing at 650.60. It retested both the yellow uptrend line and the 200-day moving average at its intraday lows at 637. In my opinion, if this support level holds, we could see Tesla run back up to retest resistance at 700, and this time around we could see it finally break out above it. With earnings coming up, this second quarter earnings will be a make or break it moment for Tesla stock. As I mentioned before, Tesla has been consolidating between 550 and 700 since February, and earnings could give it the push it needs to break out to the upside. I remain bullish on earnings because of all the news headlines of Tesla continuously selling out before the previous quarter even ends, but we will have to wait and see what the actual results will be. On Friday, Tesla was down 1%, closing at 644.22. It once again came close to retesting the 200-day moving average at its intraday lows, hitting 642. In my opinion, Tesla will likely hold the line at this support level, but if it doesn't, it would be a signal for a very bearish outlook. As you can see, Tesla is trading within a wedge, as shown here in yellow. It is currently near the bottom of the wedge, but I anticipate it to retest the top of the wedge soon enough. Also, with earnings coming up, that will be a huge catalyst that will determine which way Tesla breaks out of the wedge, if it doesn't happen before then. My conviction to the bull side remains strong, as Tesla has been setting record numbers quarter after quarter, and the market has yet to reward Tesla stock, which leads me to believe it is currently undervalued, especially given Tesla stock's lackluster performance the last few months, even with all the good news that came out. Bears constantly argue that Tesla's valuation is ridiculous, and my response to that is to take a look at Amazon, for example. Bears gave Amazon a hard time because they weren't generating profits. Only they were, but just reinvesting those profits into the business for future growth. Over time, Amazon's valuation grew to unprecedented levels as investors realized Amazon's growth strategy justified its valuation. We are seeing the exact same thing here with Tesla as they continue to hit their stride each quarter with blowout delivery numbers quarter after quarter, unmatched demand both domestic and internationally, and its continuous reinvestment into R&D leading to further efficiency of its EVs while simultaneously widening its gap in leadership versus the competition. Do I think Tesla's valuation is high? Yes, but do I think it is justified? 100%. So looking back at the charts, I can see Tesla running back to the top of the wedge at resistance at around 680. I anticipate it to break out above and then retest the top of the consolidation range at 700. Ultimately, I see Tesla also eventually breaking out of consolidation above 700 and running into resistance of the bottom of the green channel once again, which currently lies at around 737. Remember, it tested the bottom of the green channel on June 24, but was rejected and pulled back to the 200-day moving average. So those are my price predictions for next week. Bull case, we will see resistance at 680, a break above that level, and we will see it run into the next resistance level at 700. Finally, a break above that and Tesla will retest key resistance at around 737. Now, on to Tesla news. China media reports high demand for Tesla Model Y standard range. Tesla Model Y standard range has the green light in China and tons of orders, according to reports. According to unconfirmed media reports from China, the newly introduced entry-level made-in-China Tesla Model Y standard range rear-wheel drive version attracts a lot of potential customers. It would not surprise us as the Chinese EV market appears to be very price-sensitive. This is why the made-in-China Tesla Model 3 standard range sells so well, and why there is a high demand for tiny EVs. Moneyball reports that a Tesla Beijing sales consultant says that the number of orders exceeded 10,000 on the first day, and then 5,000 on the second day. According to a tweet from Ray for Tesla, multiple sources indicate made-in-China Model Y standard range rear-wheel drive is sold out for August. Now the estimated delivery time is pushed back to September, even though Tesla China site has not been updated yet. As sales gains more momentum, I expect estimated delivery time is pushed back further, probably to October. Goldman Sachs Research raises its 2021 Tesla earnings per share estimate. Goldman Sachs released Tesla's second quarter 2021 net income report in a note dated July 13. The firm raised its 2021 earnings per share estimate due to higher vehicle prices and also raised its 2022 and 2023 estimates for higher supply based on Model Y, partially offsetting the decline in regulatory credit earnings. Model Y has the same cost structure as Model 3 but has a higher selling price, so moving to Model Y should be a tailwind for margin, all other things being equal. Goldman Sachs sees that Tesla faced a number of hurdles in second quarter, including chip shortages, high shipping costs, rising raw material prices, and limited production and supply of Model S and X. However, the firm has revised its earnings per share estimate for 2021 to the upside. Goldman Sachs model second quarter 2021 non-GAAP earnings per share at 94 cents from 84 cents prior. The firm expects the price increases and Model Y ramp to have a larger impact on third quarter and fourth quarter results, and their new 2021 non-GAAP earnings per share estimate of $5 is above FactSet consensus at $4.28 and Bloomberg at $4.43. This is largely due to their higher delivery numbers assumption of 875,000. The firm recommends buying Tesla shares as it believes Tesla will deliver significant revenue and margin growth over the medium to long term due to its leading position in the electric vehicle industry. Goldman Sachs also believes the California-based manufacturer's complete ecosystem and the growing installed base of cars will open up other vectors of growth and profit and help Tesla have a strong share and profit from electric vehicles, even with increased competition. The firm's 12-month price target remains at $860, based on 14x applied to Tesla wins first, second, and third in Car and Driver's EV 1000 race. If Car and Driver had a podium for the winners of its recent EV 1000 race for electric vehicles, it'd get a little crowded with cars built by Elon Musk's company. Each of first, second, and third was won by a different Tesla model. A few caveats about this race. It wasn't on a track and top speed was not a key consideration. Rather, this was a real-world 4-state road trip intended to benchmark the state of EV technology and the nation's charging infrastructure by road-tripping EVs beyond the range of a single charge. In other words, how good is the charging infrastructure, and how long can different EVs go before recharging, and how quickly can they recharge? Essentially, therefore, it's all about efficiency and a combination of luck and strategy on who gets to charge first at quick chargers along the route, from Ann Arbor, Michigan through Cincinnati, then Athens, Ohio, then Morgantown, West Virginia, then Erie, Pennsylvania, and finally back in Ann Arbor. And by the way, if you guys want to support the channel and get a free stock worth up to $221.50, be sure to use my referral link in the description below to sign up for Robinhood. Thanks for watching, guys. Please hit that thumbs up if you enjoyed the video and subscribe for more content.